Looking at the Markets with David Modell. Hello and welcome to Looking at the Markets with David Modell. Due to high inflation and increasing demand for precious metals, Goldman Sachs and other big banks are raising their price targets for gold in 2022, helping investors around the world to maximize their return on investment in a gold bullish market. Is a returning guest on this program, Mr. David Garofalo, Chairman and CEO of Gold Royalty Corp., which you can visit today at goldroyalty.com. Welcome back to Looking at the Markets, Mr. Garofalo.
Well, thanks for having me on, David.
Yeah, I really appreciate it today, your time and your knowledge. Now that inflation is at 7% and the Federal Reserve has thrown the transitory narrative out the window, what can precious metals investors expect for 2022?
Well, it's an excellent question. And actually, I would say that 7% is a bit of a fiction. I think we're far in excess of that in terms of real inflation. The basket they use for CPI excludes all the important things like food in our stomach, fuel in our cars, and roofs over our heads. And if you include those elements into the basket, we're deeply into double-digit territory, which means that interest rates are deeply into negative territory. Inflation's insidious. It's eating at our capital every day. Our purchasing power is going down. And gold is really a secure and a preserver of capital in that type of inflationary environment. And I see no reason why gold shouldn't achieve its all-time real highs. And that's $3,000 an ounce in my view in this inflationary cycle. And we only have to harken back to the 1970s when we had significant double-digit inflation as we do now to see the potential for gold. In 1981, it achieved at the time an all-time peak of $850 an ounce. But if you inflation adjust that to 2022 dollars, that's $3,000 an ounce. So that's my call for gold in the short to medium term. To me, I'm talking about months, not years, in order to achieve that peak.
Interesting, because Goldman Sachs just raised their 12-month gold price forecast to $21.50 an ounce, up from the previous target of $2,000. So even if gold only goes that far, what effect would it have on gold mining companies and their stocks?
Well, look, I think it's a bit mixed. And, if you believe in gold as an asset class, you have to ask yourself as an investor, how do I participate and maximize my leverage to an increase in gold price? And there's obviously several ways to do that. You can buy the physical commodity quite readily, whether you actually line up at a bank or buy the ETF on the New York Stock Exchange, which is physically backed, or you can buy mining equities. And theoretically, they should provide you leverage to the gold price that's outsized the commodity exposure because their profitability should go up. But that's assuming that their cost structures are stable, and they're not. The reality is that the producers in the industry are not immune to inflation. They're experiencing significant inflation in their own right, in many cases double digit. So that undermines that leverage proposition. It's my view that the best place to play gold right now is in the royalty and streaming companies. That's why after 32 years in the business of operating and building mines, I position myself running a royalty company, because what royalty companies provide you is exposure to the top line of the mines. In other words, you get a percentage of the revenue, but you have zero exposure to input and capital costs at the mine site because you're just getting a fixed percentage of the revenue. So that provides you optimum leverage to higher gold prices, but also it provides you exposure to exploration upside because the royalties are not only in the existing reserves, but in expansions that the operators realize through their exploration efforts. So really, it's the best of all worlds. Optimum exposure to higher gold prices, optimum exposure to exploration upside without any exposure to inflation.
I definitely like the gold mining stocks in 2022, but investors have to pick and choose carefully. So please tell me, what are the risks involved with traditional mining operations?
Yeah, so it's obviously there's the technical risk, geological risk with those mine sites and whatnot, but I think right now, the most immediate risk is inflation in their input costs, their capital costs. I think that erodes their leverage to the gold price, and erodes, their margins. And that's the concern I have. And as an illustration of that and what can happen in an inflationary environment, we just have to go back to 10 years ago when we came out of the credit crisis. And we saw the gold price go up 140% coming out of that credit crisis. The kind of performance I'm expecting to see now in this inflationary cycle in gold prices. Unfortunately, the gold producers, vastly underperformed the commodity because they had significant input cost inflation coming out of the credit crisis. So they only went up 60, 70% against 140% increase in the gold price. What happened is the royalty and streaming companies actually went up about 350% against a gold price increase of 140%. So they provided that leverage proposition because, as I said, you get that top line exposure with complete insulation from input and capital and operating costs.
Now, I feel that your company, Gold Royalty Corp, can help investors to get around some of those issues that the individual mining companies might have. Again, if people are interested, they should go to goldroyalty.com. Link is in the description below this video. And the stock ticker symbol is GROY. So how does your company's royalty model eliminate many of the risk factors of individual mining companies?
Well, as I talked about the top line exposure and the insulation from operating capital costs, the other advantage we have in a royalty company is vastly more diversification than the operators have. Typically, a mine operating company may have a handful of assets, and if something goes wrong with one of the assets, there's not a lot of places to hide. We have 191 royalties in our portfolio. 6 of them that are actually cash flowing currently, 11 of them in construction, and dramatically more at every stage from early stage exploration through to feasibility study. So we have a lot of organic growth and diversification embedded in our portfolio that you can't get in an operating company. It's not practical for an operating company to have 191 mines. I'm not sure there's 191 gold mines that exist in the world. So you can't get that kind of diversification within an operating company.
Well, no pun intended, let's drill down a little bit into that. What are some of the most highly prospective assets in your company's royalty portfolio right now?
Well, what I would say, and I'll get into the specifics in a minute, 75% of our royalty portfolio by value, by our estimation, is in the 2 best mining jurisdictions in the world, Nevada and Quebec. And that's judged on the basis of mineral potential. Those are the 2 most prolific gold districts in the world, low political risk and low regulatory risk. And so we have inherently a very low risk portfolio and a well diversified portfolio on top of that within those excellent jurisdictions. We're exclusively focused in the Americas. Now, some of the key assets that we have in the portfolio is a royalty on Canada's biggest producing gold mine, Canadian Malartic, and its underground expansion, Odyssey. It's operated by 2 of the biggest operators in the world, Agnico Eagle and Yamana, so they're well capitalized, very experienced operating in that district. We also have an underground extension on the biggest gold mine in the United States, Goldstrike, operated by Barrick and Newmont in Nevada. And so that underground extension, there'll be an inaugural resource published on that this year by Barrick, and they'll start to integrate that into the mine plans at the very prolific operation Goldstrike. So those are 2 generational assets. Goldstrike alone to date has produced 60 million ounces of gold since its inception back in the late 80s. And has many, many years of reserves ahead of it. And that underground extension represents a generational asset for our shareholders. That's underpinned a dividend that we've introduced in the last week. So 10 months now after our IPO, we've been able to establish a dividend because of that strong underpinning of cash flow from those generational assets that are likely to grow over the next little while. So that cash flow profile, which by analyst estimates is expected to grow about 61% over the next 3 years, we believe will underpin an expansion of our dividend. Right now, the dividend is a little under 1% yield, but we believe given the growth trajectory we have in our revenues and cash flows, we'll be talking about increasing dividends over time.
Very nice. I love dividends. I think of it as the icing on the cake. As long as you're invested in great companies, why not collect those payouts along the way? So who are some of the major shareholders of Gold Royalty Corp?
Well, the number 1 shareholder is Gold Mining Inc., a public company on Toronto and New York. They have 12 development stage assets in the Americas upon which we wrote royalties. And then we were spun out from that company back in March of last year when we did our IPO. And in addition to that, we have Rob McEwen, the founder of Goldcorp, and he was one of the largest shareholders of one of the companies that we took over, Abitibi Royalties, last year. Jimmy Lee, pulp and paper Baron based in Dubai. He has about 6 or 7% of the company as well. He was the biggest shareholder of Golden Valley, another company we took over last year. And then finally, Eric Sprott exited Ely Gold, which we took over last year with about a 4 or 5% position in gold royalty. So these are very, very strong endorsements by very successful mining entrepreneurs, in addition to having gold mining in the portfolio. Beyond that, we have a significant float on the New York Stock Exchange. We trade between $3 to $5 million US per day on the NYSE, so we're quite a liquid stock. So there's a significant float. But again, we have some very strong shareholders within, minority stakes that really provide a strong endorsement of our business model.
Absolutely. Now, big news. Gold Royalty Corp has proposed to acquire Elemental Royalties Corp. So how will this acquisition enhance your company's value for the shareholders?
Well, look, it complements our portfolio. It brings another tier one jurisdiction into the portfolio. They own an asset, a royalty on an asset, an operating mine in Australia called Carlawinda. And so that complements what we have in Nevada and Quebec. And so we would have, again, on a pro forma basis, about 75% of our portfolio in those three tier one jurisdictions. And so I think that complements the portfolio. It increases our portfolio from 191 royalties to 200 royalties. They have 9 that they bring into the portfolio. So I think it's a very compelling proposition for both sets of shareholders. We're well capitalized. They're carrying significant debt on their balance sheet. We can deal with that debt because we have access to much cheaper capital. But beyond that, I encourage both the investors of Elemental and Gold Royalty to please read the circulars that we filed with the SEC on EDGAR, and you can judge the merits of the transaction on your own time.
Now, your company has a strong balance sheet, no debt whatsoever, and is therefore in a great position to expand. Are there any regions or assets that Gold Royalty Corp is looking at for this year?
Well, with bringing Elemental in, again, it brings in another tier one jurisdiction in Australia. It also brings in a very high quality asset in Burkina Faso. Now, of course, Burkina Faso is undergoing a military coup right now, but the operation continues to operate well in spite of the collapse of the government there. But within our portfolio, it only represents 3% on a pro forma basis of the overall portfolios. Again, the power of diversification that we can bring to Elemental shareholders. So I think we'll continue to look at perpetuating the portfolio, growing it in those tier one jurisdictions. We'll be very active, as you correctly pointed out. We have over $60 million of cash and available lines of credit, and we have no debt on the balance sheet. So we're extremely well positioned to put that capital to work and continue to grow our portfolio meaningfully.
Now, we can't make any guarantees, of course, but what type of revenue growth can we expect for Gold Royalty Corp, especially in light of the Elemental Royalty Corp acquisition?
Well, even without Elemental, we have sector-leading revenue growth. It's expected by consensus estimates to grow 61% over the next 3 years on a compound annual growth rate. That is by far the best in the sector. I would say Elemental doesn't bring nearly as much growth. They bring some immediate cash flow to the table. Our growth is very well embedded in our portfolio. Beyond that, we have what we call a royalty generator model. We have a team in Quebec and Ontario. We have a team in Nevada, again, the best jurisdictions in the world in which to operate. And their job is to generate royalties organically. And the way they do that, they're prospectors. They stake exploration claims near existing deposits, and then they farm those deposits back out, farm those properties, back out to the operators and explorers in the region and take back royalties. So before any serious money has to be spent on the ground, we farm the properties out and we get royalties back. Effectively, we get those royalties for free. And it's because we have very, very capable, multi-decade experienced prospectors on the ground that have been doing this for decades.
I am so looking forward to the imminent gold bull market. We've been waiting a long time. We've been stuck at 1,800 for way too long per ounce in gold, and getting to 3,000 or even in the 2,000s will really have a magnifying effect, in my opinion, on companies like Gold Royalty Corp. Where can people get more information about your company?
Well, as you correctly pointed out, goldroyalty.com. It's very easy to remember. And we're GROY on New York Stock Exchange American. So we'd be delighted to take any inquiries through our portal on goldroyalty.com. and be happy to return any calls or any questions you might have.
And people can click on the link in the description below this video. I made it easy for everybody. Check out the stock, do your due diligence, do your research. I think you're going to like Gold Royalty Corp. Mr. David Garofalo, thank you so much for coming on to Looking in the Markets, and we'll have to talk again when gold is in fact at 3,000.
Yes, indeed, David. Thanks for your time.